What's up, traders, and welcome to today's video. In this video, I'm sharing with you how I plan to scalp some profits on ticker symbol SPY, SPY, over the next 5 trading days. All right, so basically what I have identified is a particular pattern in which it's been relatively consistent day over day, and even some intraday trading that can take place if you spot the movement. Operating on this, you can see right here, we're on the 1-minute chart. I actually have a trade in SPY right now, and I'm just waiting for it to do its thing so that I can take my profits. However, you can see right here, it's pretty flat. It's not doing a whole lot of stuff today. But if we back out of this, one thing I've noticed, I've identified is an interesting pattern that tends to repeat itself over the 5-minute chart. And so I'm going to bounce back to the 5-day, 5-minute chart and show you sort of what I mean here. This is the 5-day, 5-minute chart on SPY. And one thing that's interesting to me is how consistently this thing is making this particular pattern and this move. What I'm talking about is trading off of the RSI. Now, there are many different styles of trading. I would say there's no right way or no wrong way, except that the right way is to make money and the wrong way is to lose money. I've had a little bit of success in both of those, losing money and making money. So we're going to focus on making money and see what we can identify here. My goal is to look at this and say, hey, if 3 out of 5 trades are successful and we actually make money on 3 out of 5 trades, then that means we are +1 when all 5 trades are said and done. And I'm just saying, like, let's make 1 trade per day for 5 days. I'm not under the PDT rule because I have a cash account on TD Ameritrade, and so there is no PDT rule, even though I'm only trading with $1,000 currently as I test different theories. Really quick, I posted this video recently, I guess maybe a month and a half, 2 months ago, trading SPY options, the 10 o'clock drop. Basically, in this video, I talked about how it seems like almost every day, maybe 8 out of 10 trading days, right around 10 o'clock or 10:30, 10:45, the S&P 500 has a significant drop in price, at which point you can pick up some call options and then ride it back up to its normally scheduled program, if you will. And so this video did very well. It's got a few thousand views on it, and it seems to resonate with viewers. And so I thought, why don't we look for other possible avenues where we can take advantage of ticker symbol SPY, SPY, which, if you're not already familiar, it basically shows you what the S&P 500 is doing and allows you to get in at a lower barrier of entry. Now, I would recommend having at least $500 to $1,000 to try these methods out, because the options for SPY are a little bit more pricey than a $20 to $30 per option underlying stock. So that being said, let's jump back in. What I'm talking about here is paying super close attention to the RSI and looking for positions when SPY is oversold, and then taking advantage of that to then purchase call options and ride those call options up to either a successful profit area, or if you're feeling extra risky, to ride that all the way up to an overbought area. So here's what I mean. If we look at November 16th, which was 4 days ago, you can see here, down here in the RSI, right where my cursor is, there is a blue line. And I've talked about this a lot before, you guys. Like, this is an oversold area, meaning too many people have sold, and now this is a decent buy. It's basically on sale, if you will. So it's oversold. If you were to jump in when that becomes completely oversold and then pulls back up to this next level here, it's a 73-cent gain on SPY. Let's say this is an ideal situation, and you have on this particular option, you have a 1.00 delta, which means out of all of the price movement that this is actually making, you are collecting 100% of that price movement. That 73 cents times 100 for your options contract, because each contract is worth 1,000 shares of that stock. That 73-cent movement would actually equate to $73. We just take the 0.73 that it moved, and we multiply that by 100, or a 7% gain in profit. 7% for the span of 15 minutes is pretty incredible. But while we're here, let's say that you did not sell on that first initial spot because the jump really isn't that great. But you put your $1,000 in at the bottom of this oversold area, which you can see right here. But you didn't sell at that next little peak. You wanted to wait it out. We see a rise, we see a fall, and then we see it really run up. Well, now you're at a 0.5% gain for SPY, which equates to $1.79 of positive price movement. Well, that $1.79 times 100 for your contract equates to $179. Comes out to 17.9% increase. That is almost 18% of increase by waiting. How long was that time frame? Let's see. 1 hour and 30 minutes. 1 hour and 30 minutes to make 18%, or nearly 18%. It's pretty incredible. Not only that, but this actually does this again on this same day here. We can't tell the future, but we can read a chart and we can do technical analysis and do our due diligence and kind of see where things are headed. We see another oversold section right here. You can see this blue mark down here at the bottom. Well, let's say we jumped in there. It has a little rise. It's got a little fall. We're patient. We're diamond hands. We're not selling at the first sign of something not going perfectly the way we want it, but we hold for a little bit. We see a movement up 0.99 cents of positive price movement. Comes down a little bit, but we see that it's strong. It's building up the volume. You can see the blue bars of volume there, and it shoots up by the end of the day. Let's say, like, ideally, we wait till the last possible minute or last possible 5 minutes, and we have this. You can see this is a 0.7% increase for SPY. This is a $2.52 positive price movement on a $1,000 option that you would buy ideally at 1.00 delta. So you're collecting 100% of that $2.52 price movement times 100, because options contracts have 100 shares in them. That would be $252. Congratulations, you're over 25% gain on one day. This is why I love options. Caution, though, we have to add the caution. This can also work in reverse, right? That could go south and you could be down by 25%. So if you're going to celebrate these massive wins and go after the massive wins, you have to stomach potential losses or holding through some of these losses to make bigger wins. Let's go on to the 17th and we'll see if we can identify some spots there. Hey, look at that. What is that? Maybe 30 minutes after the stock market opens, we see an oversold section there. Right there. There's your blue. Surprise, surprise. It's right at 10 o'clock when we estimate the 10 o'clock drop happens most days. So you jump in at the bottom of that when it's oversold. Let's say we ride all the way to this overbought section here. And this is a $2.75 positive price movement on this trade. It would take you an hour and 44 minutes and you're up $275 on your $1,000 worth of options contracts. So that can work out really well for you. Now, where you can actually take this a step further is, let's say that instead of buying one options contract for $1,000 at a 1.00 delta, let's say you bought two $500 options contracts at 0.75 delta. I like to stay at least 0.75 delta or better. And so let's say with this, that you bought two $500 options at a 0.75 delta, and there's that $2.75 increase. So now instead of getting a $2.75 increase times 100, it would be 2.75 times 200, because each options contract has 100 and you have two options contracts, so 200. And then multiply that times 0.75. So let's do that real quick on ye old handy dandy calculator. So we have 200 times 2.75 would be 550, and then you times that by 0.75 because those options contracts have a delta of 0.75. That's $412 versus one $1,000 option at a 1.0 delta, which would give you $275. Now you have two options, slightly lower delta, but you have the opportunity to make way more profit. Also, though, more risk. Whatever you're willing to stomach, let that just be sort of a warning there. Let's move ahead. This can also work in the reverse. Now you can see right here that we have an overbought section of this day's graph. This is the 17th still. Let's say you buy in at the top of that. You buy a put this time. This can be three $300 options, or this could be one $1,000 put option. But let's just say it's the one $1,000 option and you have a 1.0 delta. And it moves out throughout the rest of the day. It's pretty flat for the most part. There's $87 that you could make right there, an 8% gain within about an hour and a half. Or if you waited further on in the day, you're looking at $175, which is fairly simple. This is truly why I really love trading options. It's a low barrier of entry. You do have to pay attention to the risk reward ratio and be willing to, I mean, you're going to lose some money. Everyone loses money in the stock market. It becomes about how well you stomach that and manage your emotions until you become a consistent, profitable trader. Here we have a super flat November 18th. The first several hours are pretty flat for the day. You can see there was a small drop here, and here's where it wouldn't play out, right? Here's where this absolutely would not play out for a good day if you followed exactly what happened the day before. You see this oversold section here right after the market opens. You buy in, and you have two candlesticks that move up over 10 minutes. And you look at that, it's $76 that you would make on one options contract at a 1.0 delta. And ideally, you want to wait on a little bit longer to maximize some of that profit. Later on down the day, you're at 0.89 positive price movement, and then it drops. It's relatively flat, but then it never actually reaches the high that we're looking for, and then it starts to drop. And so here's the danger part, right? It continues to drop, and by the end of the day, it's down 4.34, which if you have a 1.0 delta and you have a $1,000 call option, you're now down $434. So don't get starry-eyed thinking that it's only going to make you money, because it won't only make you money. There are days where you'll lose money, but that is definitely a concern there. You can see how massive that drop was for sure. But the next day, the very next day, and this was yesterday, it was a beautiful day for trading. You could see right here, sudden drop. It never actually reached to the oversold side. There was no actual blue indicator here. The blue indicator is really what we're looking for, because we want to see that sudden turn that is going to shoot up and make at least $60 to $80 on a $1,000 option. However, a sudden dip, it reverses. You could have pulled up on that for a nice little $1.76 positive price movement, which would make $176 of profit on a $1,000 option with a 1.0 delta. And then it never actually reaches overbought at all. And so it suddenly reverses and moves back down. If you could time these perfectly, that would be ideal. Doesn't always happen. So that's why I'm making this video, just to share with you sort of what I see in this. This is the 5-minute chart. And this is, I find, helpful. You can also swing trade these things. If you back out of this and you move over to the 90-day 1-hour chart or the 180-day 4-hour chart, you can also swing trade some of those kinds of trades. Let's see, back here, we saw a sudden drop. You see it's oversold. You could have bought in at the end of this day. The next day, you're up $187, 23 hours later. Now let's go further back on this 90-day 1-hour chart, just to see if we can spot some other potential moments of profitability. Here on, let's see, the 16th of November, we see that it is just coming out of an overbought position overnight. Throughout the night, it became overbought. And let's zoom in here. You can see right before the market opened, about an hour before the market opened, it came out of its overbought position. However, that being said, we can estimate that because it was so overbought in the middle of the night, that it would probably correct for the next day or two, maybe 3. And in this case, you would be correct with that. So the market opens, let's say we grab it sort of in the middle here, and we ride it out, knowing that this is going to be an absolute swing trade for sure. We have a 1.0 delta because we bought deep in the money. That's the purpose of buying deep in the money, so you get the higher delta. You don't have to worry about time decay. You can focus solely on holding this over the next week or so. You buy in, it moves throughout the day, it moves higher, you're down by $140 at the end of the day. It's okay, because we know this is a swing trade and we're going to hold this. The MACD at the bottom shows our trend to be downward. The next day it opens, and look at that, wouldn't you know, just 24 hours later, you are up $313 on your $1,000 option. Congratulations, you just made 30% profit. By the end of the day, you're back to the negative a little bit, but it could continue to move down. Personally, I would have sold at the beginning of that day when it was up $313. However, if you had held the next day, and you would never have seen this coming unless you are a fortune teller, but you see that sudden drop there for whatever reason, there was a massive drop, that would have brought you $523. If we back out even further to the 180-day 4-hour chart, and I've been learning that the 180-day 4-hour chart is so important. You can see here, clear as day, these trends that happen. I mean, it is like clockwork. And if you hold for a week or two on an option, you can seriously make some money. I'm telling you, this is crazy recently. You see, it gets up here, it's massively, now this was back in September whenever a bunch of us lost all of our money. But it's massively overbought. I mean, even if you had bought, whenever it became overbought several days in a row, even if you had bought at this point right here, and you would have been down by $1,000, like you'd have been way down, you would have eventually, if you had held, be up by 1,500. So there's absolutely profit here. Let's say that at the top of this, you were like, hey, I'm going to buy in on, what day is this? The September 2nd. You bought in when it was overbought, and then you sold 2 days later, you would be up $1,800. You would have been up $1,800 of profit just by waiting 2 days and just waiting for when it went oversold. Then we get a couple weeks down the road on the 21st. Right here in the morning of September 21st, we see that it is absolutely oversold by a few candlesticks. You buy in, the next day you're up $800 on a $1,000 option with a 1.0 delta, or you wait a few days and then you're down $200 and then you're up $600. Or let's say that you bought an option with an expiration date of like 2 or 3 weeks, which is a wise move if you're going to swing the 180-day chart. What do you know? 3 weeks later, you're up $3,000, $1,000 a week. Not too bad for a $1,000 option. You get up here, obviously we see right here that it's absolutely overbought here. So what do? We buy a put option, right? And 2 days later, you sell it for $937. This is what I'm learning from this 180-day 4-hour chart. It's almost, I mean, it feels like you almost don't even have to try. You just have to be patient for the day to come, right? For this, I would say, let's see, this movement here to this oversold spot, it's $25.99 of negative price movement, meaning the price went down over 16 days. At least a 21-day, maybe even 28-day expiration date would be needed for this. But if you can make $3,000 in a couple of weeks, that's not too shabby. And then knowing that you could immediately, as soon as you sell that, the next day, buy back in and ride that back up until it's overbought once again, which is another $1,700 over 6 days. Makes sense to me. So my approach going forward with this next week would be to look at, I really want to look at trading off of the 5-minute chart and seeing what I can do. These oversold spots were in the middle of the night, but if I can spot an oversold moment during the day and buy a $1,000 option and just wait a few days. On this, I'll probably buy a 1 week to 2 week expiration date. I'm going to get as close as I can to that 1.00 delta so that I collect as much of that price movement as possible. And it will simply be one option. I'm going to get the most expensive option with the highest delta possible, as deep in the money as possible, so that we don't have to worry about time decay. We don't have to stress about intrinsic value or extrinsic value. We just move with the price of the option. Also, by trading on the 5-minute chart, it'll actually give me the opportunity to do a day trade or a swing trade at least a couple times during the week, hopefully, so that by next Friday I have some information and some profit to show you that we've made on this. I'll probably also divert another $1,000 to trade more on the 180-day 4-hour chart so that we can hold a little bit longer and see what kind of profits we make there. What's better, trying to make a day trade every single day and being a little bit less sure of it, or trading on a broader scale and being quite sure and having much larger payouts with much less work. Because honestly, guys, like, everyone has things going on. I've got my own things going on. I've got my own business that I run. I mean, honestly, guys, I don't have 7 hours to just be sitting in front of a screen waiting for things to happen. So by doing this, I can jump in when I see the moment on the 180-day chart and let it ride day over day. And I can just, glance at it, just see where we're at. And when I feel like taking profit, take profit. That's sort of the goal coming for the next few weeks. But starting Monday, I'm going to start documenting the entire trade process so that next Friday I have a video to show you on trading the RSI, a relative strength indicator, which basically tells you how strong the stock is versus its price, and collecting profits along the way with that. I hope this video brought value to you and that you got something out of it. Let me know if you've tried this method before. Leave a comment down below if you've tried it this way, and let me know if you've been successful or not. I'm super excited about trading this particular method with ticker symbol SPY, buying calls and puts along the way. Thank you guys for watching. If you did like this video, be sure to leave a thumbs up for the YouTube algorithm. It really helps out a lot. I can't even stress how much that helps the channel. If you're not already subscribed, consider subscribing. And as always, I'll see you on the next video.